Okay, I think we'll get started now, if that's okay. Well, good morning and welcome everyone. Thank you so much for joining us today. My name's Avril Craig. I'm the Payroll Director here at Henderson Logie, and I'm joined by my colleague Richy McPhee, who's one of our tax managers, and he's Henderson Logie's Employment Tax Specialist. That's our details on the screen there. If you want to contact us after the webinar, you'll get some details of our email addresses and what have you there. So I'm going to talk about what today's session is all about. Now, just before I go into that, we have another webinar about payroll benefits, which you'll find on our website. It goes into a lot more, I guess, technical detail than this one. This one is really about the fact that we're at the point in the year where employers need to decide whether they're going to voluntarily register for payroll benefits in kind, or whether they should just wait until 6 April 27 when it does become mandatory. Today, we plan to walk you through the practicalities and all the things to consider. And I hope at the end of this, it's going to give you the information that you need to help you to make the right decision for yourselves and your organisation. Richy is going to talk through the advantages of registering ahead of time, potential benefits of waiting until 2027. After that, I'll have a little chat with you about the operational systems and changes that you need to consider, really all the practicalities of day-to-day PBICS processing, and also the very important point of ensuring that your employees understand what's going on and they're prepared for the change too. I'll also talk through a couple of real-world examples just to give you a little perspective on what the system, PBICS system looks like. End of all this, we'll finish up and have time for any questions that you may want to raise. Please, if you do have questions, just raise them throughout the presentation as the questions occur to you, and we'll address them at the end. If it happens to be there's lots of questions and we don't have time to cover them all, we'll contact you at the end of the session by email. So I'm going to hand over to Richy now.
Thanks, Avril. Welcome, everyone. So I'm going to talk about what the advantages and disadvantages of registering for payrolling benefits are ahead of the mandatory 6th of April 2027 deadline for where it all becomes, you won't have a choice. So the first main advantage is that the employer will have real-time visibility of the benefit values throughout the year. So rather than waiting till the end of the tax cycle, this gives employers a more accurate and current picture of their benefit in kind liabilities. There'll be continuous monthly reporting via the RTI and FPS submissions, and that will allow employers to detect any errors earlier, such as an incomplete benefit valuation or a missing employee detail, before they actually accumulate into a larger compliance issue. There will be enhanced accuracy from including benefits in kind directly in payroll, and that will reduce the reliance on a manual end of year process, lowering the risk of misreporting or late adjustments. There will be ongoing alignment between payroll, HR, and benefit providers, and that will be useful because there'll be a requirement for timely updates in respect of any joiners, leavers, benefit changes, and it will also strengthen the employer's internal controls and audit trails. There'll be the big advantage is that there'll be clarity for the employee because they will see the taxable benefit going through their pay slip rather than as an adjustment to their coding notice, and they'll be able to see what they're actually being taxed on each month rather than getting an end of year P11D. Another big advantage is that if you register early or when payrolling benefits becomes mandatory, there'll be no more need for P11D forms. You will still need to advise your employees of what the actual annual value of benefits are, but the actual P11D form goes away. And from for the year ended 5th of April 2028 onwards, there'll be no more P11DBs, which for everyone who knows or anyone who doesn't know, the P11DB is a form that is submitted annually to HMRC detailing the Class 1A national insurance that is payable on the benefits provided and reported on the P11D. Please note that until payrolling benefits becomes mandatory, if you register early for payrolling benefits, you will still need to submit a P11DB form because the Class 1A is not collected via payroll. It is only going to be collected through payroll once payrolling benefits becomes mandatory. So just bear that in mind. And the other thing is that if because the benefits are all going to be or will all be reported on the payroll for the employee, there should be fewer adjustments to that employee's coding notice. As a result, most employees will be on a standard 1257 or S1257 L code in the coming years. There are some disadvantages to registering for payrolling benefits early. The big one is that because you're reporting the benefits monthly, there is an increased administration burden for employers and for your payroll provider as well. And that's because employers will need to calculate the taxable value of each benefit every month rather than doing the end of year calculation in one reporting cycle. The employers will need to make sure that they have robust internal processes in place to make sure that the monthly calculations are correct and avoid any payroll inaccuracies. They'll also need to manage their payroll, their monthly payroll impacts with regards to payrolling benefits to ensure that the values are correctly reflected in the FPS and RTI submissions. And they need to make sure that they have a process in place to timely and accurately collect data feeds from benefit providers, especially where benefits renew or fluctuate during the year. The main ones that tend to fluctuate during the year are company cars if there's a change, but the other one is obviously private medical, because a lot of providers, it's not on a April to April basis. The policy might be taken out in June, might be taken out in July, and then if it's an annual policy, you'll need to do the recalculations in year rather than kind of picking it all up in a one-off reporting cycle through the P11Ds. P11D, if you are payrolling benefits, you have to ensure that the benefit calculation is updated promptly for any joiners, leavers, or mid-year changes, as I said previously. And that will require active monitoring by employers. And in addition to that, there will be setup and training costs for employers to consider. So when payrolling benefits becomes mandatory, or if you decide to register early, the payroll and teams and employers will need to make sure that their staff are trained to understand the new real-time reporting rules, including how to calculate and enter the benefit in kind data into the payroll each month. The payroll teams will need to become familiar with
I think we lost you
Hi,
there a little
sorry.
bit,
Yeah,
Richy.
sorry,
It's okay.
sorry, lost connection there. Yeah, so I'll just go back over that point. So payroll teams will need to become familiar with the configuration system changes, including making sure that when they add new pay elements or the map benefit in kind, that is actually filtering through onto their software, and the software provider is actually able to incorporate that. Employers must train staff to identify any errors that occur during the year and resolve them in a timely manner, because this is the payrolling benefits is done on a monthly or a weekly basis rather than the annual P11D basis, which was the previous, which is how it currently is done. Additional training will be, or sorry, additional communication will be needed with the benefit providers. So, for example, if you've got private medical insurance with Bupa or Aviva or whoever, you'll need to make sure there's timely communication with them to advise them of any joiners, any leavers to the policies, so that they can actually provide you with real up-to-date calculation of the actual benefit to be reported in that month. And HR and payroll and finance teams will need to, or may need to jointly process training to ensure the organisation is prepared for the real-time compliance obligations under the new rules. There are some potential benefits of waiting until 2027 to actually register for payrolling benefits. The big one is that obviously if you wait until 2027, it means that you have more time to actually have the processes in place to actually capture all the data that will be needed to allow you to report the monthly benefits. As with anything involving HMRC, things change. You may or may not be aware that payrolling benefits was due to become mandatory from the 6th of April 2026, but the HMRC pushed that back to 2027, presumably because the software providers just weren't able to get the right processes in place, and HMRC didn't actually advise them what they would be. So if by waiting until the last minute, as it were, you are avoiding the need of any changes to any technical updates that or any processing changes that HMRC bring in. So what I mean, and by that I mean, if you defer the system changes until the process are fully clarified, you avoid a lot of duplication, and I'll talk about that a bit more. So as I said, if you defer the system changes until the processes are fully clarified by HMRC, you are avoiding premature configuration work, and that's because HMRC are continually refining the operational rules, the reporting requirements, technical specifications for the payrolling benefits, and I suspect that they will release further updates on that as the year progresses. It does prevent the rework by allowing employers to wait until HMRC what the final scope of mandatory payrolling of benefits will be, including the treatment of third-party benefits, international and mobile employees, and for things that are currently exempt from payrolling benefits, such as accommodation and low-interest loans. Those two benefits will still be reported via P11Ds, but the expectation is that they will come into payrolling benefits in due course. If you wait to register, you obviously will delay the investment on the system updates until the software providers can release the fully compliant and stable solutions that match what HMRC are expecting. This reduces the risk of implementing temporary or incorrect configuration systems, and if you decide to wait until 2027, you will minimize the disruption to your business in the short term. Obviously, the payrolling benefits is coming in, and so while you're minimizing the disruption for the coming year, you need to be aware of it, because you will need to make sure that when it does become mandatory, that you have the relevant systems in place to capture all the information that you need to report on the P11Ds, or sorry, on the payrolling benefits, and make sure that they're robust enough to pick up any potential errors or mistakes. The other thing that if you defer It does reduce the training pressure by avoiding the need to train teams twice. Now, that could happen where, as I say, HMRC haven't fully stated what they are expecting employers to provide as part of payrolling benefits and how that's going to look on the real-time submissions that are sent to HMRC each month. If you train your staff on the current process of what's expected, that's great. But if HMRC change what they're expecting to see on the real-time information submissions, then you may actually have to train your teams a second time on a new system on what has to be reported, and that obviously is that's not what you want. But as I say, payrolling benefits is coming in. So whatever you do decide, whether it is to defer and for various different reasons to 2027, or if you want to register early, just make sure that you do have the processes in place. I've gone through that quite quickly, so if there is anything that was not clear, by all means just pop a question in the Q&A box, but for now I'll pass over to Avril.
Thanks, Richie. Okay, so yeah, there's a lot to digest there and a lot for you to consider before or whilst you're making your decisions. So I'm going to focus now on a bit more in depth on what Richie was speaking about in the operational and system changes. I'm just trying to give you some food for thought here. Looking at how things work day to day, and actually whether you decide to proceed on the 6th April 26 or the 6th April 27, there's no getting away from the fact that your processes will need radical change. And just to give that a little bit of perspective, the current P11D system is a once per year exercise. You wait to the end of the tax year, you look back at all the benefits that you've provided to your employees. You then calculate those benefit values, report them on the P11D, submit the P11DB, then the employer pays their Class 1 National Insurance. The employees are issued with the P11D, their tax codes adjusted for any underpaid tax for that year, and that tax code adjustment's applied in the following year. So essentially they're in some, depending on the benefit, but they're kind of running a year behind. The code's estimated in the current year and any residual tax picked up in the following year. So that's come the end of the year, we'll look back and do the calculations. The PBIC system turns that on its head. The benefits have to be calculated right at the outset, at the start of the tax year for the year ahead. And this involves identifying what all the benefits are, getting them all mapped out, making sure you know what everyone's benefits are. Maybe need to give a bit of thought to exceptional items that might need exceptional handling. For example, employee loans, employee accommodations, they're not quite so easy to process through payroll benefits. So you also need to establish a real-time data flow. It doesn't stop at that initial benefit calculation for the year ahead. So every pay cycle, we need to have a system that establishes who's responsible for the payroll benefit calculations. It's likely to be the person that dealt with your P11Ds. But in any case, whoever it happens to be, you need them to have the details of any changes each month so that the recalculations can be made. So this benefit calculation person in your organisation has to collect the data. I mean, it depends on your organisation, but you might have one person that has all the private medical insurance information. You might have another person that looks after the company cars and they'll have that information. So all that needs to be collated and consolidated. The benefit calculation person, for want of a better title, brings all that data in, carries out any recalculations that are required, and then they'll pass that to the payroll person. And of course, that has to be done in time with payroll deadlines, and particularly so if you've got a weekly payroll, it can be a bit tricky. So if nothing's changed, if it's a very simple set of benefits you've got, then the figures you've already calculated stand, but it still has to be looked at and reviewed and validated that is correct. You think about new starts, leavers, someone leaving mid-month, how much PMI, much private medical insurance do we report on payroll for that month? So you need to speak to Aviva or Bupa, whoever it is that provides that benefit. Make sure you know the accurate amount that has to be reported in that month. Somebody might change a company car. Maybe the car's been unavailable if someone's off on long-term sick and they're not using the car anymore. The annual update of your private medical insurance policy, and maybe you started providing fuel to an employee or stopped providing fuel. All these recalculations. So stop, think, consider any changes every single pay cycle. And that's the big difference between how it works now and how it's going to work in the future. All that data's got to be provided to your payroll provider, payroll processor, along with all the standard payroll data. So again, having that system that captures all this and reports all this in real time is really important. Another really big consideration is employee communications. So the employees need to know what's changing and know what to expect, because suddenly their tax code's changed. They've got this new line on their payslip. What does that mean? Employees tend to be a little bit, understandably so, a little bit suspicious and skeptical. But if they understand, it'll be fine. And part of that communication piece to your employees is about explaining to them what the transitional year might look like for them, because some employees are paying what I don't like saying double tax, but they're paying some tax. They're paying the tax in real time for the current year, but they might still have a bit of residual tax from the year before PBICs kicked in. So again, being able to explain that and make sure there's a good understanding there is essential for your employees' well-being and work. End of year, the employees will get a statement that shows all the benefits, not exactly a P11D, it might just be part of the payslip, it might be a separate statement, depending on what your payroll software can produce. Team training, and when I say team training, it's what I touched on before. Everyone who's involved in the benefit calculations, it goes from whoever captures the benefit data from the company cars, from the medical insurance, just using that as an example. It's given to whoever's calculating the benefits, and that's then passed to payroll. So as Richie says, and I think I've already said, you need a good, robust system for picking all of this up. And the final point is ensuring that your payroll software is capable of doing all these, of reporting all this correctly, because there'll be new fields in the FPS. For example, if someone's got a company car, it'll show the details of the car like the P11D does currently. So you want to make sure that your payroll software is capable of accurate reporting. And we'll probably emphasize this a few times in this presentation, but if you decide to register voluntarily from the 6th of April 26, you must put this registration through before the 5th of April. I would say well ahead of that if you can. So how do you register? It's on your government gateway account in the PAYE section. There's a little section where you say I want to register, and here are the benefits I want to register. If we're providing this as part of our services, we'll do this for you. We'll communicate with you on it. But just get in touch if you want some guidance or pointers in how to do that. If you do decide to wait until the 6th April 27, it would be worth putting a little bit of work in now to get the systems in place to make sure that everything is flowing correctly from the benefit to the calculation to the payroll reporting, and so that it helps you try it out now and to see if there's any flaws in your system where, and let you work on them so that you're ready for when it does become mandatory. I'm just going to walk through a very, very simple process just to help give you perspective. Let's say you're an employer who's decided that I'm going to proceed with payrolling my private medical insurance and my car benefits. You have to register first and foremost with HMRC. Let them know through the government gateway a plan to payroll these benefits from the 6th April 26. Incidentally, if you're waiting till 27, you don't have to register. It becomes an automatic reporting thing. So this registration piece is only essential for the year ahead from the 6th of April 26. So we register with HMRC. The second piece is you communicate with your employees. We've got a template letter that we can share with you if you want, but the message you're giving them is your private medical insurance and your car benefit will now be taxed through payroll. You'll not get PLMD anymore. Your take-home pay is going to change slightly each month. Your tax code might fluctuate a little bit in the first year. Getting that message over is really important. Once you've done that, make sure you've got a good system, as I've described a few times, to capture the benefit data, calculate the benefit data and report it in real time, making sure that you're thinking about how do I pick up changes that happen each year. I'd also suggest that periodically, great if you could do it every month, but certainly every quarter, but definitely ahead of year end, make sure that you're looking back and ensuring that your year-to-date benefit calculations are accurate, because it's got to be fixed in that year if it's not accurate, and you don't want your employees getting a big hit towards the end of the year. So register with HMRC, communicate with your employees, get your systems lined up, and make sure you've got part of that system is reconciling the benefit values so that we can be sure that the correct tax is being collected and the correct amounts are being reported. I mentioned that some employees might pay more tax in the transitional year. I just want to talk you through a very simple scenario to show how that might happen. Imagine that you've got an employee who started work with you on the 1st of September 25 and he receives a private medical insurance benefit, which is £240 per annum. And you've decided to commence with payroll benefits on the 6th of April 26. So in that year from 6th April 26 to the 5th April 27, your employee is paying tax on £20 a month. The benefit's £240 a year, so £20 a month is his benefit and he's paying tax in that. But let's not forget that he started receiving the benefit in September 25. So he's got that 6 months of catch up. He's still got to pay the tax on that amount of money, and what will happen there is there'll be a tax code restriction to collect the tax on that amount. Now, this only happens in the transitional year. Once we're into full mandatory reporting, that's not going to happen because everything's happening in real time. This is what you might call an alignment, a catch up from a historical system to a real-time system. There's always going to be that little overlap at the beginning, and that will look different from different employees. Some employees might not be affected at all. Some could be quite heavily affected. So it's worth doing an assessment to look to see who might be impacted by that, so that they've got that information ahead of time and they're prepared for that change. So for final thoughts and some questions and answers, I'm going to hand back over to Richy now.
Thanks, Avril. So the final thoughts really are, I would say, hopefully that was useful for everyone. And what I would advise is that everyone just kind of take the information that we've gone over on this webinar and make an informed decision about when it's best for your organization to commence payrolling of benefits. If you do decide to payroll your benefits from the 6th of April 2026 onwards, don't forget the deadline. The deadline is the 5th. It has to be done by the 5th of April. Now, that is a Sunday, I believe, this year, so you probably will probably want to register by the 3rd of April, no later than that. If you do have any further, if there is anything that you wanted to discuss further, or you want any further guidance on this, by all means, feel free to contact us. And our contact details are at I think they're at the start of the slideshow. But we'll just take some. Here we go. Our contact details are here. And we'll just take some questions now. So I can see there are, let's see if this comes up. We've had a question, did I pick you up correctly? There is no change to the employee accommodation benefits. Would this apply to the related benefits such as utilities? So accommodation is one of the ones that is not currently going to be mandatory. And therefore it will still be reported on a P11D. However, utilities are separate to the accommodation benefit in many respects. It's shown separately. So if you are paying for the utilities for your employees, then that will be captured. As things stand, as far as we're aware, the utilities are not going to be exempt from payrolling of benefits. The accommodation is, but not the utilities, because that's a monthly cost, and it's what is the cost to the employer, it's not an accrual. It's not on an accruals basis, it's on an actual cost basis. So if you are paying for the utilities, that will go through payrolling benefits, as far as we're aware. Hopefully that's answered that question. The next one we've got is, what will happen from the 6th of April 2026 if a benefit starts during the year that has not already been registered? Will a P11D need to be submitted for it at the end of the year? Well, the answer to that is it depends. So if you have, if you've registered to payroll benefits, you can, and a benefit starts, if you registered to payroll benefits from the 6th of April 2026, and let's say in June, you decide, actually, we're going to offer company cars to our employees. You've registered to payroll benefits, so therefore you can payroll that benefit right away. You don't have to payroll everything, so if you wanted to, you could leave that benefit on a P11D and then just do the payroll benefits from April 2027 onwards. But if you start a new benefit, as long as you've registered to payroll benefits as a whole, because that's the thing, you're not just registering to payroll benefits that you've already provided, you're essentially registering to payroll all benefits. There are, and again, you can register to payroll all benefits, but not payroll some. You can mix and match for the year that's coming from 2027 onwards. The only thing that you cannot exclude from payroll and benefits is accommodation and low interest loans. So if you have registered to payroll benefits from the 6th of April 2026 onwards, and you change the type of benefits that you're providing, let's say in June, July, or August, during the August 2026, you can still payroll that benefit during the current tax year. So you will pick that up as part of that, or you can decide to just treat that new benefit as being a P11D. But I would say that if you're or if you're already doing payroll benefits for everything else, it probably makes sense that you actually payroll the new benefit that you're actually doing. The important thing is to be registered for payroll and benefits if you want to payroll them.
It's been a
Hopefully.
valid point there made, Richie.
Yeah,
About the
absolutely.
3rd of April, but I think, with it being online, it's the point's been made that 3rd of April is Good Friday, so
All right, yeah.
can we register payroll benefits on that day? I think because it's online it'll be okay, but to be honest, my feeling is do it way ahead of that if you
Absolutely.
can.
Yeah, no, absolutely, Avril. And I'm sure you'd said that before.
Yeah.
You know, if you are going to if you are intending to payroll benefits from the 6th of April onwards, I would start the process of registering it pretty quickly, because you know, Good Friday, Easter Monday, we're not expecting there to be any issues in terms of HMRC's online availability, but you
Who
never know.
knows? Who
You
knows?
never know if their servers go down or there's anything that you're stuck until the next cycle, which will be 2027. So if you are planning on registering for payroll benefits, you're as well to just go ahead and do it sooner rather than later. Does anyone else have any other questions? I'm not seeing any come through. Okay, we've not got any other ones. If anyone thinks of any questions that they maybe actually would rather just ask privately rather than to the group as a whole, by all means, our email addresses are on the screen that you can see now, and my understanding is you'll get a copy of the slides as well at the end of this. So, you know, by all means, just either contact myself or Avril, and we'll be happy to help.
Yeah, you'll get a link to the recording as well, so if you want to watch it again, you're more than welcome to. But yeah, please get in touch. We want to help you get through any of these processes that you need to carry out. Okay, I think we'll wrap up there then.
Yep,
And
I think so.
thank you very much, everyone, for attending. And we'll see you on the next webinar.
Thank you.
Thank you.
Bye.
Bye.